is Hong Kong, both the users, the regulatory environment, and the incumbent banks? Are they ready for these new virtual banks that are about to be hitting the market?
I think absolutely. I think what we've seen is the emergence of fintech over the last 3-4 years. If you look at just this conference itself, right? I've been here every year. This is the biggest so far. And I think both the incumbents, private sector, users, regulators, right, are really going to embrace a virtual bank as something that gives customers better access, better customer experience, more flexibility, and also to the serving the younger generation so that they don't have to queue up at branches anymore.
Now, you have announced that you are one of the 29 that are part of the first batch of applicants for to the HKMA for the virtual bank license. What is that going to do to the incumbents, which right now, if you really think about it, it's primarily HSBC, Standard Chartered, which was your former bank, and also Bank of China, Hong Kong. The three of them control 66% of retail lending in this market, 77% of mortgage market, 76% of the credit card market, and basically half of all deposits. Are those numbers going to come down?
I think it will. I think it will increase competitiveness as you get more exciting virtual banks coming into Hong Kong, operating a differentiating customer experience. What we think will happen, right, is people will still have bank accounts with incumbents, but they will start opening up bank accounts with virtual banks and use those more frequently because experience is better, it's faster, right? For example, for WeLab in Hong Kong, we offer lending services. Customers can get results within seconds and get the money now within minutes with the new faster payment system in Hong Kong. Versus a traditional experience, you have to wait for days and then wait for hours for money to come in, right? So it's going to be very, very different.
Now, how is the regulatory framework going to be here? Because Hong Kong is coming to this quite late. What we saw in the last year in China with P2P lending, a huge crackdown because there was a lot of fraud. They also cracked down on lending to individuals that perhaps maybe didn't have a good credit history. What is your risk management right now, and are you afraid regulators might as well be too tough?
I think for us, coming from a very strong banking and risk background and a very risk-oriented organization, we've always been very prudent on the lending side, especially on risk and fraud detection. I'll give you a number. Despite of the fact that we've never met any of our customers, our identity fraud loss has been close to 0% over the last 5 years, right? It's a testament of how strong we focus on this. And I think what the regulation is pointing towards recently is a right move where weaker players will feel that the opportunity to make a quick buck or a short profit disappeared. So now it will be left to more stronger, professional, well-organized players where they will consolidate market shares from the smaller guys.
Now, you have an app that tracks an individual, has the ability, if allowed to, tracks the user's phone activity to determine credit worthiness. In a nutshell, how does that work?
So in certain markets, for example, in China, like the younger segment, 20 to 35 age group segment, where there's a lack of strong credit data in a centralized bureau, right? We need to figure out alternate ways to do customers' risk management. And one of the things is user-generated data on your mobile phone, 100% through user authorization. How do we actually use that to analyze and accurately do fraud, identity, all these predictions so that we can actually lend responsibly at a very low rate and at the same time almost instantly. I think that is the idea of how we can use new sets of data, big data analytics, artificial intelligence in order to serve customers better.
Interesting. Now, once you get the virtual license here in Hong Kong, you're also, of course, in China under a different brand name, also in Indonesia with a joint venture, I believe, Mao Cash. What other services are you going to start rolling out? I understand insurance is a potential beyond just micro-lending.
I think lending is just a start for us to understand that customers is a genuine, underserved needs for young people, right? But after that, what we're looking at recently is with the data, with the understanding of individual behavior, can we actually serve them better? For example, one of the things that we're looking at is cross-selling credit card insurance. Like, for example, if we can predict who has kids who need a young family kind of insurance products, we're looking at how do we cross-sell insurance companies' product to them, credit card, other products. This all goes back to the idea of growing with our customers.
Right.
Imagine when we founded ourselves in 2013, 5 years ago, a 20-year-old consumer today is now 25-year-old today. And we want to grow with them. We need to offer them different products.
Now, how are you going to pay for all this expansion? I know a year ago you were talking about an IPO, but the market has been real volatile right now, and it has been down. Tech IPOs, the unicorns that have listed have not done well. Have you shelved IPO plans, or can you give us an update?
I'm sorry, I can't comment too much on the IPO. I can share with you, I think the company is profitable. I think we are very positive.
Yeah, but I mean, how's your funding right now?
We're doing well.
Yeah, you're doing well. The sharing economy in China as well is very key. How are you capitalizing on that, on leasing?
Yeah. I think one of the insights is the right to enjoy and the right to own has decoupled in the sharing economy, right? So one of the things we look at is what is a major need for a consumer and how do we actually make that more fintech? For example, mobile phone, right? Young people in the past buy mobile phones. A couple of years later, become obsolete. They have to find a way to sell it. But now we launched a new service in China together. The service is also available in Alipay and Taobao, right? Of allowing individuals to lease a mobile phone. For example, they can now lease a mobile phone, a latest model of iPhone XS, for as low as 400 RMB per month.
Yep.
And it's a minimum 1 year lease. 1 year later, they have the flexibility to return the phone, upgrade it, buy it off, continue to lease it. So that creates a lot of user traction. It's very, very popular.